If you're starting a business or already have a business underway, you're probably used to thinking about how you're going to keep that business going from a funding perspective. You may have already taken some initial funding from friends and family or angel investors to help get that business going. But once you have that business venture off the ground, what next? I'm Amanda Rabideau, founder and CEO of Arch Collective. At Arch Collective, we work with B2B tech startup companies, and having conversations about that next round of funding is no stranger to me. So I'm gonna take you through the various rounds of funding, what they mean, necessary milestones, so you understand what you need to do to set up your business for success. Once a tech startup has an established product or service, they can start thinking about bringing in outside funding, which is often through venture capital or private equity investments. Series A, Series B, Series C, all of these round of fundings are important when you're a tech startup founder. Let's take a look at what each of those different rounds of funding means. Let's start with Series A. Series A is the first round of funding beyond the seed round. Interested investors assess the profitability of the company and may offer funding in exchange for equity or some of the business's stock. How do you know how much stock you should be happy to part with? This requires a Series A valuation, or a process where analysts examine many different aspects of your company. Some of these would include a proof of concept. Does it work and can you demonstrate it? Your ideal customer base, the market size, the risk, and current and predicted revenues. Other factors such as brand reputation or even the team members can lead to determine if you're going to get Series A funding. For example, you may not have a ton of revenue coming in, but if part of your leadership team or all of your leadership team are respected thought leaders within your space, this could certainly improve your chances and work in your favor to be getting Series A funding. This is exactly why it's so critical to have strong branding and strong marketing, especially for early stage growth startups. Series A funding is probably the most important stage, especially for tech startup investments. Basically, this establishes that you're a real entity and that there's potential value in what you're doing, as it establishes that you're a startup and that you've come through and completed several milestones. Success at Series A means your company is a trusted entity in the marketplace. Let me give you an example. iTrust Capital, which is a startup in the cryptocurrency and IRA or investment retirement account space. This company was founded in 2022 and recently closed their Series A funding at a valuation of $125 million. Investor Left Lane Capital valued its return on investment at $1.3 billion, demonstrating how the potential for growth is vital at Series A. Success at Series A means you're a trusted entity in the market. And moving through the alphabet, next up, Series B. So is Series B more of the same? Not exactly. While this round of funding is about attracting new investment, or often about getting the same investors to continue to make additional investment, there are different factors to consider than those at Series A. This round takes you beyond tech startup investment or business development and moves you into business expansion. At this point, you'll have established financial reporting, so you'll be able to talk about real numbers, things like revenue, profits, loss, what you've invested in your assets. You can discuss business growth in much more detail and talk about things like customer loyalty or customer expansion with upsell and cross-sell opportunities. In short, you have so much more detail to go on, and it's less about what you could be and actually showing what you have done. In short, you have so much more data to work with than before. Businesses that proceed to Series B can expect higher amounts of funding. However, those investors have higher expectations too. New investors will likely want proof that their funds are going to receive a high return on investment. Existing investors will need hard evidence that expanding the business will increase profits. Businesses that proceed to Series B round of funding can expect higher amounts of investment. They can also expect that those investors have higher expectations too. New investors will want more guarantee that they're going to see a higher return on their investment. Existing investors will expect hard proof that expanding their investment will lead to increasing profits. Next up, Series C. If you get to Series C, you're already a very successful business, so congratulations. Companies looking for funds at the Series C stage will have very specific goals. Things like expanding into new markets, developing a new product or solution, or even getting the funding to acquire another company. Fintech company MFS Africa recently took its Series C funding to $200 million. This money had a very specific purpose. They wanted to use it to continue to expand their network so they could expand across Africa. The digital payment platform was able to capture renewed investment from existing investors and capture investment dollars from eager new investors so they could continue to expand their platform across Africa. Highlighting exactly what an investment will be used for is key to engaging investors at this level. The final word. While there are still multiple stages of funding, in fact, there are companies that go all the way to G funding before they're acquired or even go public. Series A, Series B, and Series C are the most commonly seen. As you can imagine, the more funding rounds, the smaller and smaller and smaller the funnel gets. If you're a Series A tech-funded startup company and you're wondering what's next, we can help. We specialize in B2B tech startup companies, growing their markets, acquiring new customers, and of course, driving revenue to ensure they get their Series B round of funding. If you'd like to learn more, book a 15-minute introductory call so we can learn about your business and connect you with the right freelancer or fractional CMO to help you achieve your growth goals. If you like this type of content and want to learn more about marketing and startups, be sure to subscribe to my channel, and we'll see you next time.